In true Trump fashion, he now wants his rate cuts. He still wants Powell to lower the benchmark rate. Now we are at 4.3% Fed funds today, and Trump wants at least 300 basis points of rate cuts, and that means dropping the benchmark down to nearly 1%. Now, does he understand how inflationary that would be, especially when the effective tariff rate in the US is going to hit at least 20% easily? And according to him, this will save the US economy $360 billion a point per year in refinancing costs. So over $1 trillion will be saved this way annually, which just confirms what Besson has been saying. He can't issue bonds on the longer end. The 10-year is out. The only outlet left is short-term T-bills. And this is dangerous because it's the only card left to play. Everyone knows this, and the market data is already showing how the world is responding. They clearly see Trump's demands as inflationary. Powell also sees it as inflationary, so he's not gonna cut. The market is beginning to price in a world of higher inflation, not just today or next year, but in the next 10 to 30 years. Yields are now starting to creep up once again. The 30-year is headed back to 5%, while the 10-year is rebounding back to 4.5% as well. Now imagine the amount of pressure this puts on the entire debt system when Trump just passed his tax bill. Besson will have to borrow at least $3.4 trillion over the next decade, and on aggregate, net on net, no new bonds have been issued on the long end. It's simply refinancing the old debt. Trying to push more bond issuance there will collapse the entire house of cards, and that's why Trump is in panic mode, demanding Jerome Powell to cut. And this is the biggest tell at the poker table.